friends, welcome back for Bitcoin Technical Analysis. I'm Rocky Outcrop. This is the Rocky Outcrop channel. We do daily technical analysis. I'd massively appreciate it if you've not subscribed here so far and you like the videos to please hit that subscribe button, because we're right at the cusp of 800 subscribers and wouldn't it be fantastic to see this ticking over that this weekend. So if you're sitting on the fence, then maybe be the change you want to see in the world or something like that, you know. Anyway, thanks so much for tuning in today. I really just appreciate the view in and of itself. And of course, big shout out to all the subscribers so far. Anyway, getting on with the show. What have we got on the go today? Few things to talk about, quite a bit of notes on there for us to look at. And really, you know, that's kind of putting the elbow grease in a sense, because there's not a great deal to talk about in terms of the price action really over the weekend. And it's why at some point down the line in the future, I might start taking the weekends off, but you never know. Anyway, we're here on June the 13th and it's the weekend, and it has been another weekend. You can see I've got a weekend pun in there using WEAK weekend here for this. And why am I saying that? Well, I've got the 2-day chart up at the minute, and we'll take a look at the weekly chart in just a second to kind of fit this into some context, so you can see really overall here. As you look at this this downward sloping white line, now this comes in and obviously it's broken quite a number of times on the 2-day time frame. But if you look in here, just at where we've come in recently over the last few days, you can see we've come back down below this line just here. I'll just jump up to the weekly time frame real quick. Stretch this back to something kind of reasonable to look at again, and show us that, you know, we've come back. We previously, when we got the Abby Bashar, hey Abby, when we got that high here on the week starting June the 1st, which was higher than the week starting 18th of May or 11th of May. That was continuing this sort of upward trend that we'd had on the go since March, of course. But what we've been really looking for in terms of higher highs would be to be higher than the 10,200 level for a close on the week. And as you can see, during the sort of the last couple of weeks, we've come up and near those areas. In fact, on the week beginning the 1st of June, we actually came up above that all the way up to 10,400. And people got quite bullish in amongst all that chat, of course, then. But the prices have subsequently dropped back down below this downward sloping trend line. Now, perhaps in the fullness of time, we could move this and adjust it and whatever else. But just for the time being, you can see in terms of the weekly time frame that we've actually, you know, had quite a disappointing and weak price action. In fact, you know, ever since the rejection of 10,400, it's been quite weak indeed, and that has been worth pointing out. Now, of course, as well, in terms of the bigger time frame, if you're looking at this saying, hey, hold on, Rocky, are those two white lines there, this white line at the top and this white line at the bottom, a descending broadening wedge? Well, you could say so. You know, it's the descending format. It's kind of wedgy and kind of broadening in a sense. Perhaps even this top line could be moved slightly to accommodate the recent price action of that last week. I don't know. It's too messy for me to tell the efficacy of moving that just there now, but you can see it's kind of descending and broadening. And is it fair to have that on there? Well, it's a little bit kind of preposterous in a sense that if you're looking at the prior trend, having been this one since December 2018 up to the highs there in June and July 2019, that this then descending broadening wedge structure would be going on for longer even than the prior trend beforehand, etc., etc. There's various factors about this which are not particularly great. So, but we're not really concerned about this bottom line just for now. You know, in the fullness of time, there is always the chance that the prices could come all the way back down to the bottom area of this and test the $3,000 area. Oh my God, you don't want to be hearing that on a Saturday, do you? But we're not really concerned about that right now. We've got far more things to be looking at just up and around the top end of this at the minute where the prices currently are. First off, one of those things to look at, of course, is the Friday CME Wick Watch levels for a gap. So if I go over to the CME chart, drop down to 24 hours and kind of line this up. Oh, it did for me automatically. Thank you so much. Thank you so much, TradingView. They can see here that the top area, or the top line here and the bottom line show where the wick was on Friday's CME close. Now, in terms of price action stuff for you, by the way, if we open up down in this area, then there could be a gap above the prices, which could create perhaps a potential upward momentum in order to fill that gap. Likewise, if the prices were to open up here for the CMEs above the 9,625 area, then you could have a gap below them, thus creating a downward sort of pressure on the price action. So that's sort of quick explanation. who don't know about these CME gap things, and there's your numbers for you. Does it look like we'll get one of them? Well, you know, if the prices were to move a solid $250, which is absolutely possible, over the period of the next sort of 24 to 36 hours, then yes, you could get, well, actually no, 36 hours, not 24 to 36. You know, it's Sunday evening that they open back up here in Universal Timeland. Then yes, you could get a gap on the charts, and those are the two numbers to be looking out for. So suppose equivalent prices would be 9,550, for instance, and 9,200 or so in terms of the gaps. Really, here, 9,150, let's call it 9,150, 9,550. If the spot price is operating there, when the CMEs open back up, there could be a gap. And that's just something to point out for the chat for today, you know, as part of the sort of our weekend summary of what we've got to look at. Let me just kind of find where my notes have gone. Oops. Oopsie doopsie. Let me see. These are the price targets that we've had on for a while. Where are the yellow ones? Where are the yellow notes? This whole system of notes is not really working for me all that great. Might have to just have another tab open where I write notes on instead or something like that. I thought it was fun at the start having them on the chart. As you can see, actually, if I go up to the monthly time frame, just the sheer quantity of notes that I've got on here, it's far too much, you know, it's far too much. Anyway, back down to the daily time frame. I do hope that you do like these episodes, by the way, and want to subscribe, because as you can see, there's an awful lot of detail that goes into every single one of them. What's next? Okay, so the 21 EMA is at the midpoint of that CME candle, suggesting easy potential to re-emerge below. It's currently above it. We'll take a look at that again in a second because I forgot to mention it when we were on there. And then, you know, overall, the next few things that we'll talk about here is that there is almost nothing positive to talk about on the short time frames. On the higher time frames, yes, you know, you've got the higher low potential still within the greater structure, and the trend is still your friend. But what I really wanted to point out is here when I start getting into the shouty capital letters land, but if prices go down, there is significant hidden bearish divergence. That's continuation for downward price action, by the way, on the daily between the prior pivots. And we'll take a look at that in a moment. So just first off, going over here to this CME chart again, I'm bringing up the 21 EMA on the daily time frame. So this is 21 days of price action, of course, which is you know, just something that I like to look at, and it's this yellow line here. It's an exponential moving average, and you can see that the prices are currently closed on Friday above the 21 EMA. But, you know, it's right there in the middle of this, and right in the middle of this whole entire zone. And I think, you know, when we're talking before about the potential for a gap and how it is quite easy to get one or whatever, then you can also see that either way round, we could be opening up above or below that. Now, of course, being below this and having the 21 EMA as resistance potentially for the top side, just looking back in general, it's a sort of quick fire indicator of trend. You know, when the prices are above it, then you get upward price action. When the prices are below it, you get downward price action. You know, just as a sort of general sort of oversimplification, really. But there you go. And the slope on this thing right now as well, the other thing to point out, is completely flat. So this upward slope has just dropped off. So downward price action could instigate a downward slope on the 21 EMA. It could start moving down towards the lower targets. And of course, on the weekly time frame, then, you know, you've got this sort of shorter term type crossover of the 21 and the 55 EMA. So the 21, the sort of the 6 month versus yearly type things in terms of the weekly chart, and that of course is crossed to the top side. That's positive, and it's got an upward slope on it, and they're divergent currently. But, you know, that would be the first thing to look at in terms of the 21 EMA on the daily, would be kind of operating below it, and then towards the weekly, maybe then things will start going down in a way as well. Of course, that would take time. So the other thing then, of course, that I wanted to point out in terms of regards to this 21 EMA is that, you know, we're below it here on the spot prices. As you can see, Friday's price action dragged the prices all the way down to some of these lower targets we had in mind at the 9,000 area. And we've come back up above the sort of our one of our crucial areas at that 9,400, which is operating in terms of the body today anyway of this one so far in terms of support for us. But we're below the 21 EMA, going down below this 9,400 area. Could see the prices coming down towards the 9,250 area, and of course then that starts to knock on the door of the lower area of the CMEs. Now, if you are bearish, and looking for this to go down, the way the ideal result really for you would be, suppose, in some senses, that the prices are stay around about this 50% area at the bottom of this rising wedge area as well. Come the open of the CMEs, then there is no gap at all, and then the prices then sort of proceed downwards thereafter. So that would be something to keep an eye out for if you are sort of playing this bearishly in a sense, you know. And then counterintuitively, with more bearish price action over the weekend, you might be able to get some sort of at least short-term resolution towards the upside if you're looking to be a bit more bullish on this, acknowledging the potential for bearish downward price action in the meantime. Okay, so the other thing that I want to talk about then, of course, being the difference between these two highs. This is the daily time frame, and if I just like kind of zoom out a lot more and put a lot more price action on here, so you can kind of just get the picture and take away the drawings and just kind of get the picture here of this feeling, you know, of this thing. Talking about descending, broadening wedges and all the rest of it, as we did before, forget all of that. Just look at this as being in terms of a downward trend, you know. And here's highs and lows and lower lows, and you know, or lower highs and lower lows and whatever else. So if this does come in at this area here to overall put in a lower high, and equally this is the same scenario on the weekly time frame as well that we've been looking at recently as well, in terms of, you know, it was an easier target in terms of the weekly time frame for it to close above 10,200 on a weekly but to do that you would have hoped to have had price action on the Friday in terms of the CMEs up there in that 9,200 area to not create a downward side gap, of course. So just bringing all these things together, I think you can do that yourself. It's just handy sometimes if you've got someone like me operating as a spirit guide in order to sort of, you know, spell these things out somewhat. So yeah, anyway, in terms of the 24-hour time frame, you know, bringing up the oscillators, looking at this high here, bearing in mind that this is essentially a downward trend, you know, in the grand scheme of things, and that way, what we had here between various different areas on the price, between the last two highs, you know, the pivot sort of not looking at this in from a shorter term point of view, concerned with like how these highs are operating versus their previous highs, you know, in terms of just the shorter term time frame here, but just kind of looking at this across a bigger picture and looking between between how the price action and how the momentum was going as we came up towards the 14th of February Valentine's Day highs, and then how we've done as we've come up towards these sort of 1st of June highs, and seeing that the RSI actually pushed further up, you know, and tried harder and put in more effort to get the prices to come up, actually lower than they managed to achieve over here on the 14th of February, then you can see that there's the case here to be made for hidden bearish divergence on this little, just this high here versus this high here. So you can see that now, hopefully yourself. Then let's go on back to the notes. But actually, no, wait, before we go back to the notes, you can see here in the 24-hour time frame that we're still in this descending wedge here, this falling wedge. And of course, in terms of sort of bullish point of view, this would be a bullish price sort of pattern, and you can do patterns on the oscillators down below. Likewise on the stochastics, you know, we've come back down on the stochastics to the lower end, so you'd be hoping to see a turnaround here from the lowest zone before going into that oversold territory really properly, and you'd hope to see a turnaround here at some point on this. On the RSI before too long. Maybe that's a little bit better in terms of making this look a bit tighter. And you know, but hopefully then, if you were looking for this to be bullish, you'd hope for a breakout towards the top side of this, and to then obviously counteract the actual price action, the actual candles here in terms of the rising wedge here, which is a bearish pattern, of course, which has a more statistical chance to breaking towards the downside. So yep, that's that side of things. Let's go back up to the 2-day and get my notes over here so we can look at them. Right, what have we got here? There's almost nothing positive to talk about on the short-term time frames. On the higher time frames, yes, structure, but of course we have this potential for hidden bearish divergence here. Of course, that only comes into play should this actually turn out to be a lower high and a local high, and you'd be able to say that that's possibly the case should we see the prices drop back down to below the sort of the 786 Fibonacci retracement here on this smaller term time frame, below the 236 Fibonacci on the sort of the bigger the sort of the March the 13th to to the June the 1st price action, and dropping down then towards the sort of these lower targets down here. So if that's what you're looking at, then maybe coming down towards the 382 or the 886 or so on these ones, going down below the previous low over here, looking like the structure really has broken towards the downside, and that this actually overall kind of turned out to be more of a descending type outcome. Then you could say, right, okay, and not only are we moving towards the downside, but there's actually some girthy hidden bearish divergence there on the chart. Most positive thing to be said are that the chart showed bearish issues for a while, so maybe this is a chance for them to reset. Secondly, just in terms of how we've had this downward price action, and we had bearish divergence on the way up there. Go to the 24-hour time frame. Look at things like how we had this high followed by a higher high, which was bearishly divergent here in the daily time frame. The most positive things that you can really say about this are that we had negative things on the charts before, and we've managed to stay within the structure of this rising wedge, which could easily be in other people's perspectives on other charts. For instance, you're looking at this one with the purple line here, might be easier to see on this one, with the symmetrical triangle. Indeed, on the CMEs, it's easier to see as well that we're still within this overall structure, yada yada. Maybe that's what needed to happen in order to continue on whilst we put in a higher low. So that's the most sort of bullish thing that you can say. And of course, that exists purely on the higher time frames, because on the lower time frames, literally everything looks pretty much negative, lower than daily, sort of, so to speak. I could look at them in a minute, but that sums it all up for you. Secondly, the 21 EMA is below our pivot of 9555 again. So if I go back to the 24-hour time frame, zoom on in, talk about the 21. We've been talking about the 21 for so long now as well, and during this price action here, and how we're going to be using this in this sort of medium term, which we're now we've been doing for a wee while, to judge the trend. Well, you can see it's actually below the 9555 area again, the 9545 actually where that line is. So if we were to jump up above the 21 EMA and that area, we'd be getting 2 for 1, and there's an easier chance of that happening. The further that is below in terms of 21, just to kind of give you a stair-step and approach to being able to get above that and achieve one thing after the other in bite-sized chunks. So there's that. So that's maybe a sort of a bullish type stance on that price action. There, am I missing the notes? Here we are. So yep, again we reached the 50% fib and pulled back near the 618, so potential there for bearish divergence to have paid off fully. I've kind of already covered that. So anyway, time will tell. Yeah, basically what I was kind of getting at before, I just have to actually do it, I suppose, don't I, since I've spoken about it now. Going on in here and looking at where the price action came down to, you can see we got damn well close enough. It's close enough to the sort of shorter term Fibonacci retracement point of the 618 there, and you can see the bodies haven't got supported by, and potentially you could say turned around at this 50% area, which is what Dow Jones himself, the man himself, used to say was the most common retrace point or whatever. So we've kind of achieved that with the bearish divergence beforehand. So if you want to be bullish about things, that's kind of how you're going to have to look at them. So where's my notes? I regret changing the time frame all the time. Anybody got any tips for how I could do this whole notes thing better? Then leave them in the comments down below. So yeah, maybe just stop doing the notes. I don't know. I don't need the notes so much. Whatever. Time will tell. We can look at Ethereum as well and stuff like that in terms of the I'm going to wrap up the episode now, by the way, over the next minute or two. So yeah, we can look at Ethereum as well and things like that for sort of indications about how the prices might be responding. It's always good to look across the market. Don't become myopic when you're trading. People don't do this in traditional world, and sort of serious traders don't do it in crypto world either. They don't just be myopic about things and only look at one aspect. So if you want to have some more information, you can look towards Ethereum, for instance, and try and make assessments about if it's going one way or if one's leading the other. Perhaps a move on one side could see you profit on a move on the other, or whatever, that sort of thing. Another thing to note is that the drop in prices when the Bitcoin dominance increased a little and other coins dropped too means money has left the market in general. So that's something to be aware of. So open interest will have presumably dropped. I've not checked that. Can't really be bothered. But let's just have a quick jump over to the Bitcoin. Bitcoin dominance chart. You can see here it was going up over the last few days. This is the 2-day time frame, 24-hour time frame. Okay, so it dropped, yesterday and today slightly, but of course, it was going up beforehand, jumped up a bit. At the same time, looking at, say, just in general, the other markets, just in general, let's just look at XRP. I've not looked at it in a while. Dropping down there, as you can see. Look at XTZ dropping down there, as you can see. Maybe you can't see, but now you can. So in general, money's left the markets overall, because you can see as the Bitcoin dominance went up. Anyway, there's very little utility in the Bitcoin dominance. It's just something that's just good to throw out there and distract people and make them think that you're talking about something else. Make them think you're talking about something special when you're not. Until such times as the Bitcoin dominance actually moves above 70, there's nothing interesting to be said about it. We're making higher highs and higher lows on this thing, and it is trending towards the upside in general if you want to look at it since over here on the 14th of February. But what good does that do to you in terms of trading Bitcoin and all the rest of it, considering that the 14th of February saw this huge drop-offs in prices, and we don't trade the dominance. We just look at this so we don't trade this, so it's almost pointless. It is something to be looked at, but the value I just extracted from it there, I think is more or less all you could really, that's good enough for me anyhow for now. Again, let me know in the comments down below if there's something you think I should be looking at in terms of that. But anyway, as we can see, money left the market in general. The open interest will have diminished, which could be healthy, like medieval bloodletting. So like back in the medieval times, people used to think that putting leeches on you and kind of cutting at you and letting your humors kind of go back into balance, because they believed in this sort of sanguine idea about medicine. This is obviously before the era of modern medicine, and actually after the era of the Greek medicine and stuff like that. Highly interesting history of medicine, really interesting stuff. Anyway, people used to think that letting out blood was like a good idea for you. Now there are some treatments actually in the world which use that sort of thing, but basically they used to give you that for everything back in the day, and really it did no good whatsoever. So the question is, has the open interest, which is presumably dropped, I don't know, but anyway, the money in the market has dropped obviously over the last wee while, is kind of what I'm seeing by looking at these things which don't have it, without actually going directly and looking at open interest itself. When that's happened, is that a good thing? And quite often actually it can be. You're coming up to certain areas, there's people who are dumb monies put their money at places where they could get stopped out. The liquidation hunts come in, the stop hunts come in, they look to do that to increase the portfolio size so they can move the prices up or down to the next level where they want to operate at with a full portfolio without having to suffer too much slippage, essentially slipping the price all the way to the next level in order just to fill up their own book. So in a sense that's a good thing, and it can be a good thing. But then on the other hand, bloodletting was never really a good idea. And generally speaking, if we want to see the prices of this going up to $100,000 or whatever, then the open interest in the market will obviously escalate extremely compared to how it is now. So I'll leave that one with you, and you can let me know. Let me know in the comments down below, I suppose, what you think about bloodletting, if you actually made it all the way to the end of this episode. I'm going to tune out now. I really appreciate you tuning in. Obviously, I put in a fair amount of effort with these episodes all the time. Do the same every day. I really hope that you like it. I know that the people who have subscribed and everything else do, and I've spoken to many of them in the Discord and stuff like that. Of course, join the Discord too if you want to. But I really hope that you choose to subscribe here, and that we see the numbers of subscribers tick over that 800 level over the weekend. I mean, that would just be delightful, and maybe we can target getting up to that 1,000 before the end of the month. I mean, would that not be amazing? I think it would certainly beat my target of getting there by quite a distance. So that would be wonderful, and what an affirmation for the channel and for myself personally. So or of course, if you think I'm a dickhead, just hit that unsubscribe button, hit the thumbs down, leave it, put a comment down below, and let me know what you think if you like as well. Who knows? I'll just catch you next time. Tuning out now. Thanks so much for tuning in yourself. See you now.